Let me make trading easy for you, because a lot of people be trying to make trading complicated for no reason, and it's not supposed to be complicated. In this video, I'm going to give you a beginner level explanation of how to get started with trading and how to trade profitably. I'm going to keep it simple. I'm going to show you the strategy that I use. I'm going to show you how I get my trading setups, where I enter, where I set my stop loss, and where I set my take profit. If this video helps you out, please hit the like button, subscribe, and let's get started. So step one is figuring out what direction is the market heading. So the market usually moves in three ways. It's either going up, which is an uptrend, or it's going down, which is a downtrend, or it's ranging, which is usually called consolidation. So for an uptrend, the market is usually going to look like this. We're going to have a high, we're going to have a low, higher high, higher low, higher high, higher low, and so on and so forth. And we are going to name this uptrend. And then a downtrend is usually the opposite of this, where we are going to have a low, a high, lower low, lower high, lower low, lower high, lower low, lower high. And then we are going to call this a downtrend. And then if the market is ranging, that is just going to be consolidation. For those of you who don't know, consolidation usually looks like this. It's when the market is not moving up and it's also not moving down. It's just in one stagnant state and it's not going anywhere. That is consolidation. Step one is figuring out, where is the market heading? Are we in an uptrend? Are we in a downtrend? Or are we consolidating? And if the market is consolidating, leave it alone. We do not trade consolidation. We are only going to trade if the market is trending. Okay, once we figure out where the market is heading, in this example, let's say the market is going up. An uptrend is usually made of higher highs and higher lows. And how you figure out if you're in an uptrend, right, is the market is going to come up, make a high. It's going to come back down and make a low. But then, instead of going lower, it's going to come back up and make a higher high. Why is this a higher high? It's higher than the previous high. We're going to call this a high, and we are going to call this a low. So this is how an uptrend is created. The market is going to go up, it's going to make a high. It's going to come back down and it's going to make a low. But instead of continuing down, if the market goes up from here and breaks the previous high that we created and makes another high, that becomes an uptrend. Because in an uptrend, we are usually going to break highs and create higher highs and higher lows, right? So it's going to go up, create a new high, which then it's going to come back down and create a new low, as long as this new low hasn't broken the previous low. So we've established this is our high and this is our low. We've come back up, we've broken this high, right? We've made a new higher high. When we're coming back down, as long as this new low that is being formed doesn't break the previous low right here, as long as it doesn't go past this. So let's say it comes back down, it creates something like this, then it goes back up, yeah? This is going to be a higher low. Okay, why is it a higher low? It's a higher low because this low is higher than this one. Remember, these are signs of an uptrend and we are in an uptrend. The market is going to come up, make a high. It's going to go down, make a low. It's going to go back up, make a new higher high. So we have to call this higher high. The market is going to make a higher high. It's going to come back down, make a higher low. And then it's going to continue doing the same thing. From here, it's going to go back up, make a new higher high, then it's gonna, from this new higher high, it's gonna come back down, make a higher low, make a higher high, make a higher low, make a higher high. This is what an uptrend should look like. If the market is consistently making higher highs and higher lows, that means you are in an uptrend. The same applies for a downtrend. For a downtrend to be formed, the market is going to make a low, right? It's gonna make a high, but instead of going higher, it's gonna come back down, break this low, and create a new low. We are going to call this our low, and then we are going to call this our high. So the market has come back down. It has broken this low, and it has created a new lower low. Why is it a lower low? Because this low is lower than the previous low. In a downtrend, if the market makes a low, and it makes a high, then breaks this low, creating a new lower low, it's going to come back up to make a new lower high. This lower high is only valid if it doesn't break the previous high. So it's going to come back up, make a new lower high, then it's going to go back down, make a new lower low, lower high, lower low, lower high, lower low. This is how a downtrend should look like. Once you know where the market is heading, your next step is to mark out your key levels. And key levels are going to be your higher highs and higher lows if the market is in an uptrend, or lower lows and lower highs if the market is in a downtrend. So for you to mark out your key levels, and for you to figure out what direction the market is heading, you're going to need to do that on the 4-hour time frame or the 1-hour time frame. Those are the two time frames that you use for this. How do we find our key levels? Let's say we are in an uptrend. You can see the market made a high, it made a low. Okay? Let's say all this hasn't happened. just yet. You saw the market made a high and it made a low. Your first key level is going to be this high. So you're going to use your rectangle tool to mark out this. You're going to mark out your high and you're going to also mark out your low. You're going to wait for the market to either break your high, which is this high, to make a new higher high, or you're going to wait for the market to break your low. So for the key levels, you're going to mark your highs and your lows. Once we figure out that this high has been broken and we are looking for buys, then we are going to wait. Like I explained to you guys, the market is going to go up, it's going to retrace, come back down to make a new low, then continue up if we are truly in an uptrend. So you're going to have to wait for the market to either break a high or break a low. Once we break the high, we have a new higher high. You're going to have to wait for a higher low to be created. So once you wait for your indication or a new higher high to be created, you're going to wait for your correction. The indication is when the market breaks a high and forms a new higher high. The correction is when the market retraces or corrects back down and creates a new higher low. That is your correction. Once you mark your key zone and the market corrects below or just on top of your key zone, your entries should be when the market comes back above your key zone. So your trade setup would look like this. Open the charts, you mark your key zone, you mark your high, you mark your low, right? You sit on your hands and wait. The market then gives you a new higher high. That is the indication. Remember, we are trading ICC. I trade ICC and I am giving you guys an explanation of ICC. The market gives you a new indication, right? So now we are thinking buys, okay? Then, since we are trading ICC, we are going to have to wait for the correction to also happen. Once the correction happens, it is usually going to happen below your key zone or just on top of your key zone. Once the market comes back down and forms a new low, if we are looking for buys, once the market starts building back up, your trade setup should look like this. This is supposed to be your entry. Once the market comes back above your key zone that you marked, you enter your trade. You enter your trade at the key zone once the market comes back above the initial breakout point of the new higher high. The initial breakout point of your key zone is right here. This is the initial breakout zone of your key zone. And once the market comes back above your highlighted key zone, or let's say this rectangle, for just to keep it simple, once the market comes back above your highlighted rectangle on the chart, yeah, so that will be up here. After it's made a higher low, once the price comes back above your key zone, that is where you enter your trade, which is going to be right around here. You enter your trade around here. You put your stop loss at the previous low that has been formed, and your take profit should be where the indication stopped, which is going to be at the top of this high, because this is where the price went up, created a new higher high, stopped around here, then came back down to create a new low. This is where your take profit should be. So we have our indication, we have a correction, this is our entry, and then we have a continuation. And if the market is truly in an uptrend, it is going to keep on making higher highs and higher lows. If you are into swing trading, from here, once the market reaches here, you can either take your profits or you can hold for more profits. If the market breaks this high again, creating a new higher high, then you know the market is still continuing up. So you can just hold for more and hold for more until you're satisfied with the amount of money that you have. I need you guys to take a screenshot of this and keep it for later reference. This is how your trade setup should look like. Same applies to the downtrend. Your key levels are going to be your lower highs and your lower lows, right? These are your key levels, and you need to be marking your key levels just like that. I hope this is simple and easy for you to understand. Now, let me show you how to apply everything I just showed you to the actual charts. So I'm going to give you guys an example of a recent gold trade that I took. I think it was a week ago or 2 weeks ago, to be able to illustrate this point even further. We had the market going up, higher high, higher low, higher high, higher low, higher high, created a higher low. This was the last low, and that was the valid low. We marked that low because that is our key zone. We marked the low and then we marked the high. Right? The market ended up breaking the high, giving us an indication to the upside. But that was Friday and the market ended up closing. Come Monday morning, the market ended up breaking to the downside. And you remember what I told you? You mark your key levels and wait for a break of either, right? We had a break on Friday, which was fine. The market ended up closing. But then come Monday morning, the market ended up breaking to the downside. So since it's a new week, it's a recent break, we ended up considering this more than that, right? So we have an indication to the downside. This was our key level and this was our key level. This was invalidated because the market ended up breaking to the downside. So we have an indication to the downside. Cool. The indication stopped right here, right? We had to wait for the market to correct, which it ended up doing. The market corrected and then ended up creating a lower high. Market came back down, stopped right here just below our box, went back up just a little bit, but then ended up also creating another lower high, right? So we have a low, we have a high, have a higher low, but then we have a lower high. Then once the market came back below this rectangle, that was your entry. And that was also my entry. And below this rectangle, the market pushed below, ended up creating a lower low, came back up, created a lower high, then ended up pushing to the downside and creating a lower low. Our trade setup would look like this. We have our indication, we have our correction. Once the market comes back below here, that is your entry. Stop loss at the last lower high that was created, right? Then take profit, you wait to see what the market is going to do. So when the market came here and started buying up just a little bit more, it created another lower high, which would have been more confirmation for you. So we move our stop loss to down here because this is the recent lower high that has been created. Our target would have been here. And as you can see, that is already a 1:2. But just like I told you, since the market was trending, price ended up breaking this low, giving us a lower low, which is another indication. So if you had entered from up here, that would be more confluence for you to hold your trade because we have a low, we have a high. We ended up breaking, creating a lower low. Then the market ended up correcting, just like I told you guys. The market ended up correcting to create a lower high. And once it came back below this black line, that was another entry. And then you hold that entry all the way to down here. So this was our initial trade setup. Market ended up breaking this low, giving us another indication. We had to wait for a correction. And then once it got back below this black line, you could have added another entry and then held your trade all the way to down here, giving you a 1:5 risk to reward ratio. That is how you trade ICC. And just to show you guys the proof, these are screenshots of the trades that I took. This is the same setup as you can see on my chart. This is my MT5. This is the same setup, the same entries, and the same exit. I post all my trade setups on Instagram stories, by the way. If you want to follow along and see my trades before they even happen, follow me on Instagram. I've linked it down below. If you check my highlights, you will see my trades, and this is the same exact way I trade every single day. And keeping it simple like this has helped me become better at trading because you don't need to complicate your charts with all these indicators and everything they tell you to use. Keep your charts simple, keep it market structure, and I promise you, you are going to become better at trading. I hope this video helps you out and simplifies trading for you. If you have any questions, leave them in the comment box below. I'll get to them and I'll make a video about it. Don't forget to hit the like, subscribe, and I'll see you in the next one. Peace.